Now we're talking. Now we're talking. Back in the action once again here this evening. Hope you had a great day out there. It's time to get back to work here tonight. We have a little bit more than 12 hours until the Non-Farm Payroll Report tomorrow. I want to make sure we are locked and loaded for a finally Friday trading session. Speaking of which, it's Thursday evening. It's June the 4th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job this evening is to help us find the best entry setups for tomorrow. That's Friday's Non-Farm Friday trading session, and I got a great video in store for you tonight. The charts are all prepped up in the background, as you can see. We got some oil, we got some E-minis, of course, and we got those gold futures. I have a lot to cover in the video tonight about all of these markets ahead of tomorrow's finally Friday session. Before we jump in and get the whole plan put together, though, I just want to remind you, make sure you subscribe to this YouTube channel. We publish some great stuff here every evening on this video. I want to make sure you get them all in your inbox. So subscribe to the channel, and then don't forget, if you have any questions about anything we talk about tonight on the video, drop those questions in the comment section below. I'll make sure to get those answered after I finish up the video tonight. And as always, if you tune in every evening to watch this video, hit that thumbs up button for me. If you're anything like me and you rely on this video to get your mind right and get your charts right, hit that thumbs up button, subscribe to the channel, and thank you so much for supporting our YouTube channel. But enough of the introduction. Time is ticking right now. Time is money tomorrow morning. Speaking of tomorrow morning, let's get ready for tomorrow morning by checking that calendar here for tomorrow. Jumping into the Econ calendar here, courtesy of Econo Day. What do we got for tomorrow? Tomorrow's a Friday session. It's not just your average Friday. Tomorrow is what's called Non-Farm Friday, or the Employment Situation Friday. This is the first Friday of every month, right? First Friday of every month. So anytime you get the first Friday, you can bet your bottom dollar you're going to get an employment number there at 8:30 that Friday morning. So first Friday of every 1 month, we get the non-farm payroll number. Now, the most important thing you want to be aware of when it comes to tomorrow is be careful overnight. The overnight session ahead of these non-farm Friday numbers tends to be a little bit choppy, a little bit sloppy, because you got to remember it's very difficult for a big lot trader. You know, I realize that we are, small size traders, relatively speaking, right? We're not trading thousands and thousands of contracts that have to be scaled in and scaled out, right? We don't have that problem. We're like little speedboats, right, as day traders. But if you were managing, a couple $100 million of somebody else's capital, it wouldn't be easy for you to get in and get out of positions very easily. And what will happen is, as we go overnight, there usually is, there's always exceptions to this rule, but usually it's a relatively quiet overnight session because, as I mentioned in last night's newsletter, a lot of people will start getting out of positions or balancing their portfolios on Thursday morning, Thursday afternoon. So we do expect there to be a relatively quiet overnight. Obviously there's a lot going on in the world we live in right now, so any unexpected news headlines could easily change that. But typically, though, it's a pretty quiet overnight session. So just be aware if you're in Asia. If you're in Europe, don't force it. If the markets are quiet overnight, you know why. Everyone's waiting on 8:30 Eastern time tomorrow morning. Now, once we get to tomorrow morning, the most difficult market is usually gold, right? So we'll go over all the charts tonight, but usually the most difficult market to trade on Non-Farm Friday is gold. The S&P will definitely be a close second, and probably the one that's least affected by this will be crude oil tomorrow, right? Don't worry, crude is its own set of problems. We'll talk about that in a moment as well. So all the markets will be affected by this, but gold is definitely the one that kind of has an asterisk next to it tomorrow. It does typically get a little bit choppy, sloppy, unpredictable, right, in and around that non-farm payroll number. So be aware of that. The next thing you want to keep in mind is give it some space. Give it some space. So, I usually use a 5-minute buffer. On a number like this, I'll use a 15-minute buffer, right? So 8:30 is the news. After 8:15, I'm definitely sitting on hands. And of course, really what I'll try to do is stay patient until about 8:45. Now again, there's exceptions to these, to these rules, but give yourself some room around this number here tomorrow. If you could only be at your desk tomorrow for an hour, 9:30 to 10:30. if you could only be at your desk tomorrow for an hour, 9:30 to 10:30. Usually when the dust settles after that non-farm payroll number, we then go into that top of the hour at 9 o'clock. We go into the opening bell on the New York Stock Exchange, and things start getting a bit weird as we go into that open. So just be aware, it's tight. It's tight in the early part of a non-farm Friday. That's why I say tomorrow, if you can only be at your desk tomorrow for an hour or so, 9:30 to 10:30, 9:45 to 10:45, right? That will probably be where you're going to get the dust has settled off the news, and you'll finally be able to get some pros in the market moving things around for us. So be aware of that, right? So, 15-minute buffer, but just be aware. After that, after that expiration of 8:45, after the blackout window, right, expires, we still have to go through 9 o'clock and 9:30. So again, 9:30 to 10:30. That's where I'm expecting, right, the best setups here for tomorrow. Then keep in mind, it's a Friday, which means you've really got to have a good reason to be trading after 11 o'clock tomorrow, right? So you really got tomorrow, it's that 9:30 to 10:30 block. After 10:30, 10:45, 11 o'clock, be aware, it's just a bunch of gamblers at that point. Professionals, now keep in mind, professionals know this, right? They know the market is going to be really dirty and nasty before the news comes out. They know it's going to turn to a gambler's market in the afternoon. So a lot of professionals, especially people that I talk to every day, they go in very light, very early out on the non-farm Friday, and they come back for reaction Monday. So save your bullets tomorrow. Don't spend all your ammunition tomorrow. Save some of that for Monday. Monday is usually the professionals' day to come back in. That's when they come back in and start swinging heavy and putting on their full-size positions again. So tomorrow, careful, early, especially before the news comes out, be careful. After the news comes out, give it some breathing room. There's no rush to jump in after the news comes out, because typically that, 9:30 to 10:30, close up shop early because it's a Friday, and then of course, again, save your bullets for Monday's reaction Monday. That may be a much better opportunity for us, right? If we can't squeeze anything out, we will, right? We'll find some good stuff, right, between that 9:30 and 10:30, but again, don't force it going into that time here. Now, there is also quite a bit of other things going on there right now, right? There's a lot going on out here in the world right now. For example, OPEC. We heard about OPEC today. Yesterday, we've been talking about this confusion, right, among OPEC, and basically we heard from OPEC this afternoon, and all we hear is excuses, right? It was I'll leave all the jokes aside on this, but ultimately, because there are so many jokes I could tell about this right now, but basically what's happened is they're having a hard time with compliance, which we're all completely surprised about, right? So the production cut happens a few months ago. Turns out that people aren't complying, right? Shocker. And we're now just finding this out right now. So today, right, a couple OPEC nations said, we promise, quote unquote, we promise to cut production by the end of July. So I'm now renaming OPEC, right, the group of excuses, right? That's pretty much what it is. OPEC, the OPEC nations, from what I've seen so far, they sound like a bunch of teenagers saying, yeah, Dad, I'll mow the lawn on Sunday. Yeah, Mom, I'll get to the dishes next week, right? I promise I will. That's what's going on right now at OPEC. Now, the good news is the reopening of the economy is probably going to take precedence over that. So because the economy is reopening right now, we saw a big, strong number out of American Airlines today. The markets really responded mostly to that report today, that they were going back, I think, 55 to 60% capacity year over year. I think people were thinking it was going to be 15 or 20% capacity. So we heard from the airlines, some big name airlines today, and they were pretty confident that they were going to see a relatively good, strong comeback here. And I think that is probably going to outweigh the excuses that we keep hearing out of OPEC. And that's probably why oil jumped towards the end of the day. If you were watching today in the trade room today, we heard OPEC come out and say, yeah, we're still waiting on a couple countries to confirm compliance. And then we finally hear this explanation at the end of the day saying, they promise they're going to comply here. Sure. I'll wait for that next week. But the bottom line is, it does look like the reopening of the economy, the positive numbers coming out of the airlines right now are probably going to be enough to be a boon for oil going forward, at least for the next 24 to 48 hours, until we hear more excuses out of OPEC of why these production cuts were never involved. Now, we also, of course, know, right, we heard from the U.S. and China today. I'll tell you, really, really interesting, some of the stuff we're hearing out of this trade deal right now. We heard from the U.S. Representative for the trade deal right now, and there were a lot of rumors going around earlier this week that the Chinese were not buying soybeans and this, that, the typical lies you see in the media right now. And we heard directly from the source that they have actually made good on 95% of their purchases. So this trade deal number one, phase one trade deal, appears to still be locked down, and both sides, from what I can tell in the on the headlines right now, both sides appear to be playing ball, which is a huge anchoring for the reopening of this economy. So put this all together right now. I think on a normal day, I think OPEC and the excuses would be a huge problem for oil, and it may still be a big problem for oil. But I think the rest of this is going to take over, and I think that will probably keep this pushing higher here as we go in. The big variable for tomorrow is, what will that number come out tomorrow morning? What will that number come out at 8:30? It's going to be a horrible number, right? Let's be honest. It's going to be a bloodbath number. It's going to be a knock your socks off, holy Christmas, I can't believe how bad that number is. But the big question will be, is it not as bad as they were expecting? That's the big question. If that number comes out, anything like that ADP employment number came out, remember, they were expecting a bloodbath number on Wednesday, and it was a fraction of that. If that translates over to the number tomorrow, boy, we may have a very busy day of buying later in the session tomorrow. Now, obviously, this is all speculation right now. It's all speculation at this point. None of this, right? None of this. This is all basically currents running under the surface of the water right now. The real stuff we want to make sure we're paying attention to here is the charts. But it does look like going into tomorrow's trading session, it does look like there is going to be, unless that jobs number messes things up, things do look very bullish here as we go into next week. Now, don't forget, tomorrow morning, every morning, Monday through Friday, we're going to trade those charts. We're going to follow those trends, find the best setups in our trade room. I would love to have you there with me. It's much easier to learn this and do it with me every morning. So what I'll do is I'll put all the membership information for you guys in the description of this YouTube video. So come out and join us Monday through Friday in the trade room. Trade it with us. Right, you'll love the trade room. Great place, right, to come out and apply the strategy we're talking about here tonight. Speaking of which, let's jump into some charts here. I apologize for the long-winded intro, but it was needed. There's a lot going on out there right now. We got some S&P here. We got some crude, and we got some gold out there, right? A lot of good stuff on these charts here. The S&P looks like it's poised to go right back to its highs. Oil is very interesting right now because, as I said before, under normal conditions, I think oil will be running hard, going lower right now. But oil's an interesting one. We'll grab that tonight. And how about that gold? Gold's the one you really got to be careful with tomorrow. A very big clue on gold. They're pushing higher on gold right now, but it's how they're moving higher that is really the biggest clue I see for tomorrow. Everyone's talking about the S&P right now. Let's jump into that E-mini S&P. What do we know about the E-mini here tonight? Well, if someone was to ask me, how would you describe the E-mini, I would say we're basically in a range and we are rotating back and forth, back and forth. And so if rotation goes as planned, we rotate off the high, the low, the high, the low, we should be headed back up to retest those highs for tomorrow. And at this point, right, with the positive, with a somewhat positive number tomorrow, with the airlines, right, rebounding, with the confidence coming out of the U.S. and China trade deal, right, again, forget about the excuses from OPEC, it does seem like this market is poised for a nice, strong continuation going back up to those highs. For right now, though, we know we have a relatively strong bull momentum, but we're right back up in the range. So we're rotating back and forth. A range-bound market tells me stay out of the middle, buy low and sell high. Range-bound markets are balanced. Imagine there is a magnet right in the middle of that trading range. We run down, we come back up. We run up, we come back down, back up. We go up, we'll probably come back down. Now, this is the big question, right? The big question is, as it finishes off this rotation, will this baby keep on going, right? That is the potential that we're dealing with tomorrow. Or will all of this fall apart, right, and the market dumps if that number comes out, right, relatively poor tomorrow? These are some variables we're watching as we go in. Now, if I had it my way, what would be my favorite setup here for tomorrow? Knowing it's a range, knowing that rotation is going to be key, right? The buyers want to get back up to retest those highs, right? Knowing that we have a lot of momentum here. My favorite setup right now will be buying off the low of this channel, this hidden channel. That would be the ideal, and we'll talk about the specific pattern on that one in a moment. Or, right, getting up above this high and using this trend line overhead as we go forward, right, to finish off that retest of the high. Those would be, if I had it my way, those would be the two setups I really look forward to. So we know where the buy zones are. We know where the sell zones are. We know where the no trade zone is. We don't want to trade in the middle. Now, most important thing, I know we have momentum on our side. I'm marking up that little high right there, up to that high, and bringing it down off that low. Now, if I can get a pullback down here, right, I'd love to get us down inside that buy zone. If I can get a pullback down inside that buy zone, down around that big round number, there's also a trend line coming down here as well. It's not really that necessary to bring it into this picture here for right now, but be aware, a lot of support down there. What I'd like to do is get us just underneath the moving average. If I can get us just underneath that moving average, I can now anticipate sellers will try to short this thing down to retest that low. Right? They're going to see that big move down. They're going to think it's a bear market, and they're going to think this market now is ripe for a short. My goal is to get them short off that moving average and then buy right into those stop losses as we go higher, right? It's a simple seller failure pattern, off a key level of support below the range, right? That's the key. That's the key. Below the range, buying at support, plenty of room to snap back as we go. Now, if we keep pumping higher here, right? If we keep pumping higher, and again, could easily happen as we go in, I then want to use this trend line. And this trend line, at first, it's a big deal because it's resistance overhead. But if I can get a strong move through and get what I call a two-try trap on this, this becomes a really desirable setup up here with a very simple pattern called a two-try trap pattern. Now, the way this pattern has to work is we have to start off with a strong move up. The moving average now needs to get just a little bit above that trend line. Then I'm looking for that shallow pullback, that higher high, and that trap. Now, in all honesty, I don't need to actually use the trend line, but it would really be great to use it as a support level. The bottom line is I've got to be above that trend line for me to really have a good shot at this. It's not going to be as reliable if I'm trying to do this right into that trend line there. It just won't be enough momentum. It won't be very reliable enough. And of course, the objective will be to take a quick target off at that high and then let the rest of it run. Tomorrow is one of those days where if this thing really started to get cooking tomorrow, you could see a kind of fluttering higher here if things did go kind of the dream scenario for the buyers tomorrow would be it rips back to the highs and keeps on fluttering on lower volume in one of those melt up scenarios that we get every once in a while on a low volume kind of Friday afternoon. So those are two patterns I'd love to see here. A failure below that low, right, and a two-try trap pattern right above the high. Now, we trade these all the time together in our trade room, but if you're not with me every morning in the trade room, you can learn both of those patterns by grabbing the free course. I'll put a button up top here, upper right-hand corner. Grab that free course button, pause the video, not to worry, I'll be here when you come back. Pause the video, grab the free course, learn all about traps, learn about failures. You'll learn a lot more than just those two patterns. You'll also see hundreds of examples of how we apply those patterns to our favorite futures markets. So grab that free course, and don't forget, in addition to joining our trade room, I'll put that link also down in the description of this YouTube video or right right below the video tonight on the trading blog. Now, the only problem I have right now is, what if we don't go higher or lower, right? What if we sit here and we start going sideways? If we sit and go sideways here, now it's nothing more than a bull market into a range. What do we do with a bull market into a range? We buy below the range. What's my favorite pattern? It's a failure pattern. I'll wait for the pullback. I'll wait for the moving average comes over. Wait for those sellers to get short off the moving average pullback. And now we know exactly where their stops are. And we can buy right into those stop losses for a seller failure pattern as we go. So a relatively simple plan here on the S&P. Another pattern I'm watching for as we go higher here would be a 1, strong move up, 2, pull back, and 3, jump off the moving average. If I can get this thing to really push off the moving average, a lot of momentum, I can mark up that high, mark up that low, and I can buy the low of that hidden channel. The key on this is, 1, I'm not buying the pullback to the moving average. That's not going to be a very reliable trade because you're right at the high of the range. You're right with that trend line resistance. I will skip that one and wait for what I call a 1, 2, 3 breakout of that range, and then look to hit it hard off the low of that channel. Now, you're also probably wondering, how could I short this market for tomorrow, right? Those are some good setups to be a buyer here. What's the opportunity here to get short? Well, the most reliable way to get short is to turn momentum short, because right now we are not in a very good place momentum-wise to be selling short. For me to turn this on the bears, now I want to go lower. Let me get rid of this channel here real quick. I'll put it back on once we're done here, right? I want to see us push lower. Now remember, as we push lower, this is where I'm looking for that seller failure into a bullish, right? Into a bull run back up into that range. But if they can hold that pullback and jump off the moving average, if they can give me a 1, 2, 3 reversal, okay, I'll now look at that as a bear market. I'll look for that, right, lower low, that high, and look for that short off the high. So I'm not opposed to being a seller. You know, I know there's a lot of news and a lot of headlines right now that are definitely making it very easy to assume the market will go higher. But for all I know, right, these will all be wrong and the market will tank, right? So we don't want to put too much stock in what we saw today, because we may come out tomorrow and this market may have a completely different personality based on what's happening overnight. So I do want to be open-minded to this and be prepared for it as well. Again, I want to see that strong move down, that pull back to the moving average, and that jump off the moving average. That tells me the bears have control. Now find resistance, mark up that low, pop it up now at that high, and I've got that short coming in off the high of that hidden channel. It's called a 1, 2, 3 reversal. In this case, a 1, 2, 3 breakout into a hidden channel pullback. Now, could I sell up here? I could sell up here. There are 2 patterns I would do it. I wouldn't do it at the trend line though. I would do it at these highs up here. I wouldn't try to sell off the trend line. It's too close to the range. Plus the buyers have one thing in their mind right now, and that's to get right back to retest those highs here. So I would, first of all, one of the prerequisites of this would be we have to get to that high first. So once we're up at that high, 2 patterns I would love to see to get short, even though right now it doesn't look very likely, but 2 patterns looking forward to get short tomorrow if the situation does present itself would be a crown reversal, which is a shallow pullback, right, off the moving average, a failed retest, a lower low, and a trap high. Okay, this is probably the most reliable of all of the reversal patterns, right? It is a reversal pattern, by the way. Momentum will be very strong at that point. So if we do run up, make sure we get the top of that, right? That range high hit. Once we get that high hit, buyers try to buy it once. They can't retest the high. They pull back. They try to do it again. They can't retest the high again. But now they're met with lots of sellers coming in. And once you get that big, strong red candle closing back below that moving average, all the buyers who are committed on that, they're going to get out, right? They're going to panic. They're going to get out of their positions. They're going to sell their way out, and the market will collapse as we go. That's called a crown reversal pattern. They're not going to be as common as this one. This one's more common. As we go higher here, we pull back, we try again, we pull back. This one's a lot slower. This will take a lot longer to develop, but these are also very reliable reversal type patterns here. Nothing's nothing's magic here, by the way, right? Nothing's magic. There's no magic indicator that signals, oh, now my special, XYZ indicator signals a short. That doesn't exist, guys. It doesn't exist, right? You can find all of the momentum divergence and MACD crosses that you want, but when you're going against momentum like this, ain't nothing gonna make it more reliable. All you can do is make sure you give those bulls enough rope to wrap around their neck, and then once they're in, once, twice, right, then again, you're finding a level of resistance. You're doing it off of that major high, right? Nice strong signal, and we're back down in from there. We call those nested failure patterns, right? Buyers try once, buyers try twice. I'm selling off of that level of resistance. All right, guys, so a lot of great stuff we're watching here for tomorrow. Don't forget to grab that free course I mentioned earlier, and again, I'll put all the details in the description of the YouTube video. Let's keep this party going, though. S&P is just one of the items on the menu here for tomorrow. And then you got this guy, or this gal, whatever you would associate with it, right? This guy here, oil. What are we going to do with this oil? Well, we talked about last night how OPEC was confusing the hell out of all of us with their commentary back and forth, right? First it was the meeting, they were jostling back and forth, and now, of course, right, we've renamed OPEC the excuses cartel, right? Because that's basically all we heard today was, yeah, we promised, right? We promised to cut production in May. We promised to cut production in June. No, by July, right? We'll have it done by July. We were all teenagers once, right? I was a teenager once, and I lied through my teeth to get a compliance with my parents, right? That sounds like exactly what we're getting right now out of a lot of the OPEC countries. So, and I can't say I don't blame them, right? I can't say I don't blame them. I wouldn't want to stop producing oil either. That's my livelihood. I completely understand where they're coming from. And you know what? They've never really been busted before. This stuff happens every time, so I can't really blame them for trying to milk the cow, right, as much as they can get. So we know there is a concern that these compliance issues are really there. They're not just rumors. They are really there. Countries are not cutting production. But like I mentioned, though, in the introduction, with the news out of the airlines, with the news out of the China trade deal, with the news regarding, good positive vibes regarding this reopening of the economy, right? There is obviously unrest in the United States. But you can tell the markets right now, the markets are loving the reopening of the economy. And I do think in this very rare situation, I do think that is going to be more important than the excuses we're hearing from OPEC. Last night we talked about this big drop down and how much I wanted to get that big push. And you can see they wanted it. You can see how many people were trying to short this thing, right? And then what happened was, at the end of the day today, we finally heard that update from OPEC, right, saying, yes, they told us they promised to cut by July. I think at that point, though, there was too much good stuff out there, and I think the market now is overwhelmed with buyers here. At the very least, thinking we're going back up, at the very least, to retest that high at that 38.18 area. And, I talked about this last night, $40 a barrel, $40 a barrel. It's not that far away. This is oil we're talking about, right? That's less than $3 away right now to get to $40 a barrel. It's $2 and change. I mean, we can move $2 on oil in an hour. So I wouldn't put that out of the race for tomorrow. Like I said, if the stars really align tomorrow, a low volume Friday afternoon could really lead to some very big runs towards the end of the day here tomorrow. That is, of course, speculation right now. We know the market is a range. We know that ranges tell us to buy low, sell high, and avoid the middle. We know we have a very strong push to finish off the day today. Anytime we see a strong move in one direction, we know we're probably going to see another leg in the same direction. So, I'll tell you, I was an inch away from saying on the video tonight that I'm looking to dump this thing back down again, right? That's what I would say in any other environment right now. I would say this does not make sense. It doesn't make sense. Not with the excuses we're hearing. It doesn't make sense the market runs up. When I see, you see this all the time on markets like oil, because oil and natural gas and silver, they're just illiquid enough to be manipulatable. You know what I mean? They're just illiquid enough to get manipulated. You can't do that to the bonds. You can't do that to the S&P. You can't do that to the Euro stocks. You can't do that to a lot of the big equity markets, right? Indexes. You can move these things around on oil. And so what happens a lot in the oil markets is you'll hear OPEC say one thing, the market will do the other, and then 12 hours later, we find out all it was just the big money in the market setting this thing up on a tee to dump it back down again. And that may be exactly what's happening right now. Let me be very clear on that. They may be grinding this thing up here, right? Just to get their buddies in at a great spot and pull the rug out tomorrow. Because again, if it wasn't for this boon of, if the economy wasn't keeping this thing afloat right now, the reopening economy, I think we would be having a very different discussion here on the oil. So that's what I'm seeing for tomorrow. I do think we'll probably, at the very least, get up to that 38.18 area. Will they take it back down again? That I don't know. I would imagine, though, if things line up pretty well tomorrow, we could see a very nice run going higher here because of the things we've talked about already. Now, knowing that, where would my dream come true be, right? Where would my dream come true be? Well, I got kind of three spots on this. One would be, like I mentioned last night, I still would love to get that deep pullback, that nested failure, and that buy off that low. That would still be, right, that is still my dream right ahead of tomorrow, right? If that would definitely be the one thing I would look forward to right here tomorrow, would be get down to that low, get those bears trying a couple times, right, and then pull the string as it rips back up again. That would be ideal. We may not get that, though, right? The next best thing would be, I've got this trend line coming up with this channel. Now, this is where I'm really leaning on the overall fundamentals of this reopening and the fact that they are shrugging off this bad news from OPEC. Well, it's not bad news. It's just, you can tell they're not telling us the whole story right now. And I think most people do see this, right, as exactly what it is. The bottom line is, I think if we get down to that low here, I'd like to see if I could get a little two-try trap, right, off of that trend line. Now, I know this puts me back inside the range here, but I think it's worth the gamble on this one. I think this one is definitely one of those situations where if I can get these bears trying a couple times, right, get them in off of this trend line, I think that is another very, very viable setup there that a lot of traders may miss. That's another setup I'm watching here for tomorrow. Then I think the hardest one's going to be what to do as we go higher here, because you can easily tell where they want to go. They want to get that 38.18 area, and then we can get to worry about where we go from there. So if we do end up running up through these highs here right now, there's a couple options I'm watching for. The one I would trust the most would be a two-try trap, a strong move up, a shallow pullback to the moving average, a higher high, and a trap low. Now, this would have to be before we get to retest that high up there, right? So 38.18. We'd have to get into that before we get that retest, okay? It's not going to be easy. It's going to be a bit of a thread the needle. But that would be, again, if we're talking about our favorite setups for tomorrow, that will be my favorite as we go. Another scenario I'm watching for as we go is, can we jump up? Do we start going sideways up here? And if that's the case now this trend line, right? This trend line becomes our best friend now, right? Because now I can use that trend line in combination with a seller failure pattern below that range, right? To buy it back up from there. So a beautiful chance here if they can confirm that trading range, right? Going higher there. So just to recap there, my favorite setups here on the oil would be, can we get that dump down, take out those lows, right? Find that one try for the bears, get the two try for the bears, let them wrap that rope right around their neck, let them dig their own grave with their own sell orders, and then that tells you now where those stops are, right? And you can simply buy right into those stop losses for what could be a very quick short covering rally back up. Or it's that two try trap pattern off the low of that channel, right? Again, a little bit more aggressive on that, but I think it's definitely worth the attention. Or that two try trap pattern as we go higher here. Again, remember to pay attention here. You want to make sure you get that one before we get back to retest the high. You want that shallow pullback, that higher high, and that trap low, right? That two try trap pattern. Again, we talk a lot about these patterns in that free trading course, right, that I mentioned earlier, linked up in the upper right-hand corner. Now, what if this thing really starts to get weird here tomorrow, right? What if it really starts to go crazy? If we do push up, we pull pull back, and we really run, right? If this thing makes a very, very strong run higher here now, what I'd like to do is grab a trend line off the high, put that trend line off the low. And again, the prerequisite for this is it's got to be very strong here, pushing through that high, right? Not the way I'm drawing it here, right? I should be drawing it more like this, right? So we go up, right? The market keeps on pushing through that high. I'm now marking up that high, marking up that low, and buying the first pullback off that hidden channel. 1, 2, 3 breakout. I'll tell you, the hard part's going to be if the market does this, right, runs up, this is going to be a very difficult trade to buy here, right? That's a difficult spot to buy. That is going to be a difficult spot to buy. If they can break through that high, again, because you can kind of tell where they want to go. It's a major top up there at 38.18. There's nothing else up there until you get to 40s, right? The next stop there is 40. Right now, we may also see, like I mentioned earlier, we may also see a bit of a flyer, right? Or a sleepwalker or a zombie market, whatever you want to call it, on a Friday, right? And this could also happen on the S&P as well. If the market starts to run and it starts to just kind of grind, right? And grind and grind. Now, if you start seeing that type of price action right now, obviously I want to get that, right? I want to get that channel here and buy the low of that channel. But on these non-farm Friday sessions, right, as the market runs higher here, what will happen is it'll pull back. You'll get that seller failure. That would be the ideal if the market kind of flutters higher here. But be aware, if it gets low volume and the thing just starts to kind of crank higher, we'll have to get more aggressive tomorrow with traps. And we'll talk more about the specific details, how to get into that stuff, right, tomorrow morning in the trade room. So that's the goal as it goes higher here. Be very careful with that breakout running higher. Now, how do I sell this market? Can I sell this market? Well, it's very difficult right now to get short this thing because of that last big bull run, right? That last big bull run makes it really difficult to sell short. The only one I would trust to sell short would be I'd first of all have to make sure I'm at least that high up there. Then if I can get at least to that 36, right, 67, I can then at least start looking for that crown reversal, that 1, that 2, and I can sell short off that trap high. One of my favorite patterns in trending markets. But again, there's a lot of fundamentals right now. The lack of rotation that we talked about last night, the airlines, the reopening of the economy. The fundamentals right now don't exactly point towards a bear move down, again, unless, of course, we wake up tomorrow and the world does start taking those OPEC excuses seriously, which it doesn't feel like they're doing here today. Not based on what we're seeing here into the close and the open in Asia. So, of course, I got my crown reversal. Make sure it's off of that big high, right? It's going to be off that high, or even better, off of the other high, right? Go up, 1, 2, trap, and go from there. Crown reversal patterns are some of my favorite reversal patterns. Now, we may also see this market jump up and start to spin its wheels, right? So we pull back, they try once, we pull back, we find our trend line, and we look for that short off the trend line. We call these nested failures. These are great setups, but I'm going to warn you, they're going to take a lot longer than you think they will. They're not going to trigger in 10 minutes, okay? They're going to pull back. It's usually going to be about a 25, 30-minute period where you're waiting for the pullback, you're waiting for that breakthrough. It tries once, it pulls back, tries twice. These are lower lows, these are lower highs, and of course, we're always trying to sell off a level of resistance, right? Always trying to sell off that level of resistance back down right into that low. So those are some ideas I've got right now on this, right, on this oil here. I think the only problem we're going to have is if the market sinks back into the range and goes nowhere, right? If it does one of these like it did today, where it kind of sits there all day long. It doesn't give us very much. If it sits there in the middle, stay away from it, right? Sit on hands. And of course, I'll help you walk through all this stuff every morning in the trade room, but stay away from that middle, right? Buy low, sell high, and avoid the middle. Should be a pretty exciting day today or tomorrow when we have, if we can stay out of that range and get this thing moving here for us tomorrow. So crude looks pretty good. I'm very curious what's going to happen on oil in the next 24 hours because of this OPEC situation we're dealing with right now, to see who's more important, right? Is it OPEC or is it the boon on the reopening of the U.S. economy? Let's wrap things up now with the gold. We've got the S&P under control. We got the crude. Are you still here right now? Are you still here right now? If you're still watching this video right now, we're 40 minutes into this video. You are the people. You are the person I do this video for every evening, right? I don't need to put all this effort in, but I know you guys are working hard like I was working hard almost 15 years ago to make this dream a reality too. So if you're still here right now, thank you so much for working hard. I'm doing this for you. This is why I do these videos 4 hours a day, right? Putting it all together and putting this effort out because I know people like you are watching. So hashtag still here, hashtag 1% in the comments section below. Hopefully by now you subscribed. Hit that thumbs up button for me if you're still watching at this point in the video. But let's wrap this thing up tonight on the gold. What do we know about gold right now? How would I describe this gold chart? First of all, I would say we are bullish, right? We have that 1, 2, 3. We talked about the boxed in scenario last night on the newsletter. We talked specifically about how important it was to get that jump going higher. What a beautiful example, right, of a 1, 2, 3 reversal into a hidden channel pullback. Please tell me that you saw that on your chart, right? Please tell me that you were aware of that. We talked all about this last night on the newsletter. So definitely hope everyone was prepared on that for the gold. That was a very easy example of a boxed in scenario from yesterday. If you missed the video from last night, it's the next video here on the playlist on YouTube or scroll down on the blog. But now, new day here. We know we're bullish. I would say we're definitely bullish, but see what's happening here right now, though? Let me get rid of these measured moves here. You know where those are, right? See what's happening? We saw a strong move up. Let me zoom in a little bit closer here. We saw a strong move up, and that strong move higher, what happened? So first of all, anytime we see a strong move in one direction, what do we know? It's almost a guarantee we get another leg, right? So it pulls back, right? The bears try once, they try twice, and they fail, right? And they run back up. This is exactly what will happen when a market makes a strong run, but then, of course, in a bull market, it's a very strong pullback. Right? Strong pullback, nested failure. 1, 2, and go up from there. Now, we know we had a strong move. We know we had a nested failure and a retest of that high. But look what happened at the high. It barely made new highs. Now, what does that tell me? No, it tells me we're still bullish. That doesn't mean we're bearish now. We're still bullish. I still want to be a buyer. But you'll notice we're seeing a trend here now. We're seeing some clues. Every time they're making new higher highs, they're not getting very far. Right? We're not seeing, this is not the S&P right now, right? They're bullish, but they are barely bullish. When I start seeing these barely making new highs right now, I know I'm going to have to see more of what we saw today, which is those deep pullbacks, get those sellers to think this market's bearish and buy right into those stops. Right? That's the plan for tomorrow. So what's my dream come true setup for tomorrow, right? I'd like to see us pull back down to the low of that new channel now. Yes, it will be a relatively strong pullback. So ideally, I'd like to get the bears trying once, trying twice, like we saw right here, right? And get those bears to get stopped out, buy into those stops, and then buy the pullback to the moving average, right? That comes along with it. Now, that'd be the dream come true, right? That'd be the home run scenario. Deep pull back into the buy zone, get those bears to wrap that rope around their neck and buy right into those stop losses. Then the real ideal scenario is we add to the position with that pullback that comes afterwards. Now, a lot of times what happens is you get what happened here, where the market flies, right? Where it doesn't pull back. It gives you a deep pullback. It gives you that nested 1, 2, and then it rips, right? That's what happens when a big pullback fails and runs higher like that. So if we do get that deep pullback and we do get that nested failure, you can anticipate this will probably race higher, but don't chase after it. The next best pattern is that 2 try trap pattern. That's going to be your next best setup as you're trying to avoid buying high, and the best pattern to do that is to buy with a trap. So that is the one thing we got here that we didn't get over here. right? So, hey, we're talking about our dream come true here, right? That will be the dream come true for tomorrow, is that deep pullback. Again, we're not getting very higher highs right now, so give me a nice deep pullback. Let me be a buyer down in that buy zone, nested failure, right, into that two-try trap pattern, right, as we go higher. That would be a good one. Now, another great kind of dream come true pattern for me here would be if this market goes higher. Right, if it goes higher. Now, where could it be going here? Well, this is the new measured move off that prior area, the weekend gap. Okay, we haven't talked about the weekend gap all week here, but guess what? It's time to pay the bill. The weekend gap definitely looks like, remember, the weekend gap is last Friday's close. What do you think the chances are that gold closes this week, this Friday, right where it closed last Friday? I would say the way the market looks right now, it isn't out of the picture. Yes, it is definitely a big push higher, but no, it is definitely not out of the picture whatsoever, right? Especially if we hear something overnight regarding more stimulus, regarding more bailouts, right? Keep printing more money. Gold will respond by going higher there as well. Now, I talked about the deep pullback on this. That's kind of the easy one. How about if we keep going higher here? If we keep going higher here now, okay, now I want to pull out another one of my tricks, because again, we have to assume that eventually this is going to give us a sharp pullback. I'm going to mark up that high, and rather than trying to trade that, right, that small channel there, which would normally be what I would go after here, but in this particular situation, because of the condition we're seeing right now, I'm going to widen out that channel here. Right? Widen out that channel to a little bit wider channel. Okay? And the reason why is because as we start getting closer up here, again, we're seeing a lot of these deep pullbacks right now. I'm anticipating more of that tomorrow. I'd like to get that deep pullback now, right? Get those bears to try to get short, and let me buy now, right, into those stop losses. So the bottom line is, if we do keep running higher here, if the market does keep going higher, okay, I'm not going to just simply get aggressive and buy up here. I could certainly look, if it really jumps, right? And let's be honest, if it really jumps and really starts getting strong, shallow pullback, higher high, a two-try trap pattern, use the top of that channel. It's not required, but it sure as hell wouldn't hurt. Right, little trap low there. Again, we call those two-try trap patterns. I talk all about these patterns in that free trading course I mentioned earlier. Or we go up, we break through, and again, assuming this doesn't just rip higher here, I'm going to mark up that high, I'm going to mark up that low, and then look for that buy off of that low. And what's going to happen is it'll be like that. The moving average will go like that. Bears will come in. They'll try to get short off it, just like they did back here, and hopefully we can buy right into those stop losses, get that seller failure, get that bullish pullback, and finish off, right, that weekend gap. Okay, that will be another ideal setup here for us as we go, right, as we go higher. Now, don't forget, tomorrow is Non-Farm Friday, so what if we go sideways here? If we go sideways, not a lot changes. If we do end up going sideways, which is very likely ahead of non-farm payroll, I then want to make sure I'm buying at some area of support. Remember, when it comes to a bull market into a range, I want to go with the bulls. I want to buy below the range. And where do I buy? I want to anchor onto some support level, right? Some support level. Now, unfortunately, this trend line might be too close to it. So tomorrow what I'm going to do is I'm going to be watching for prior swings, watching for expanding triangles, and looking for, and again, we'll do this more together in the trade room, but I'm looking for some additional level of support down here, right, that I can use. It doesn't look like at first glance that level right there is going to be deep enough. It might be. It depends on how this range starts to develop, but ideally, if the market starts going sideways in a range here, it'll give us something like this, right? Where it'll give us a trend line we can use now, and we can then use that trend line in combination with that seller failure pattern to be a buyer below the low. Maybe it's a channel line, right? Maybe it's that channel line. It probably, well, I mean, again, I couldn't tell you. It all depends on how that range looks, where the range is, and we'll do more of that, obviously, together, right, tomorrow morning and every morning in the trade room. We can kind of fill in some of these blanks here, right, in the trade room. So if it does go sideways, keep your eyes open for that buy underneath. And again, anchor it on some support line, right? We want to buy underneath the range, but we're doing more than just buy below the range. We're buying below the range at a very reliable level of support, right? And we'll break that down in more detail in the trade room. Now, how do I sell this market? Well, I'm not anywhere near a turning point right now, right? I'm not anywhere near a turning point right now, so I can't even think about getting short here at this point. The only way to get short at this point now would be a 1-2-3 reversal. So strong move down, hold the pullback, jump off the moving average. That would be really the only way right now for me to qualify a short. I'd have to see us go lower, hold the pullback, and jump off the moving average. Knowing that, I would then mark a low off that, mark a trend line off that low. I would draw off that high, and I would short, of course, off the high of that channel. Where's my target? Pretty easy at that point. It's back down to retest those lows. Now, again, I don't want to sell that first pullback. Why? The same reason why I don't want to sell that pullback. It's not a bear market yet. If that pullback holds, then it becomes a bear market. Then I can sell. But we don't just sell with a deep pullback, not when the market's already bullish. Right? I always use the analogy of like in American football, when one side has the ball, they have possession, and the other side has to literally rip the ball out of their hands. That's the way this works, right? Control is in the hands right now of the buyers, right? The buyers have the ball right now. The sellers have to rip that ball physically out of their hands and take it. If they can rip it out of their hands, literally, right? And if they fail, guess what happens? You know, just like in American football, if you go in and try to strip that ball, what happens? They keep it, they're running, and they're going without you. And that's exactly what happens in the markets, right? If the bears can't rip if the bears can rip that control out, what happens now is now the buyers are stuck. The buyers are getting out, right, and the market will run lower. That's when I know now the bears have control. I can grab that channel, right, and I can grab it from there, right? I can trust it after it turns directions, but I can't trust that first one. Now, again, another option here would be to be a seller here would be if we go sideways, right? If we start being really sideways here tomorrow, we go up, we get a 1, right? We get a 2, and we get one of those nested failures. This will very much be, though, based on kind of how the personality feels at that time. Ranges are tricky because if you don't see good rotation, you don't want to sell, right? Like on the oil right now. You know, oil has a lot of bullishness coming out of that range. If we do see it go sideways, we'll keep an eye on the personality, and that may set us up tomorrow, right, for a short off that high. But again, that would be after a range, after we're seeing it get sluggish there, then we start looking for those nested failures off of that high from there. All right, guys. Boy, great plan for tomorrow. I am stoked for tomorrow's Non-Farm Friday payroll session. I hope I'll see you guys tomorrow morning, every morning in the trade room. Don't forget, I'll put all of the membership information for you guys down in the description of that YouTube video, right? Grab that link, get registered, and I'll see you every morning, Monday through Friday at the opening bell in the trade room. Don't be afraid to call me tonight on the telephone. I'm always here ready to rock and roll for you guys. If you have a problem with phone, right, use that live chat. I've always got live chat on the right-hand side. And as always, if membership isn't quite a good fit for you right now, grab the free course as part of our free trial. I think you'll really love it. It'll help you at the very least start to see trading for what it really is, right? It's the buyers and the sellers competing for control and it will help you find the most reliable setups every day in our trade room. Grab the free course, grab the free trial, and keep in touch. All right? Have a fantastic day tomorrow. If we don't see you guys tomorrow morning, and as always, drop those questions in the comment section below. Hit that thumbs up button for me, and I hope by now you subscribe to this YouTube channel because as you can see, we definitely put out the good stuff here every evening on this video. But that's all for me tonight, guys. I'll see you guys tomorrow. If not, we'll come back and do it again next week in the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.